Welcome to the RECON Trader. In today's video, I will share with you a new scalping strategy that I am currently working on, and it revolves around a new indicator that I have created over on TradingView, and that would be my RECON Trendline Breacher indicator. So with that being said, let's actually jump over to TradingView and take a look at a chart with the indicator actually applied to the chart. Now you can see up here in the left hand corner, RECON Trendlines Breached is the name of the indicator. Now this is a private indicator. You will not be able to find it by searching TradingView indicators. I will, however, be releasing this indicator to my RECON Trader YouTube channel members, and so they will actually have access to it before I release it to the general public. Now, if you're not a RECON YouTube channel member, you can simply join by jumping over to YouTube and clicking on the join button. And from there, you would just click on join, and that would give you access to, for example, private indicators, such as my scalping indicator, my pivot high-low indicator. I also have a TradingView automated strategy based around an EMA cross. In addition to, you will have access to exclusive videos, and in the very near future, live streaming, as I have finally figured out a live streaming software that does not crash my trading platforms. So in the near future, if you're a member, you'll have access to some of those live day trading streaming videos as well. Now, with that all being said, let's jump back over to the chart and do a little deeper dive on this actual indicator and how I'm utilizing it to scalp on, for example, Ethereum perpetual contracts, 5-minute chart over on the Bybit exchange. And so far, some of my back testing, it looks like it has a win rate of around 80%. And that is with the default settings. Now, if and when I do release this to the general public, you will be able to adjust the settings by coming over here to the actual indicator and clicking on the settings button. That would allow you to adjust the look back length, which I have as a default at 18, and the slope angle, which is set at 1. Now I could change the slope angle to say 3, and you can see that dramatically increases the slope of the actual trend lines. Or I could do something like 1.3, and it won't be quite as a dramatic change in the actual slope of the trend lines. Now, by making that simple change over here on the slope, you can see that we have actually lost one of the signals, and in fact, that's a losing signal. I can tell you just by eyeballing it. However, we also improved a signal on this candle was where we originally received the breach of the trend line. Now that breach of the trend line, because it's more of an angle, is way back down here, so we'd get in earlier and perhaps capture more profit. But on the flip side, having a more extreme slope could give you more false signals. Really, your experience with trading and identifying false signals could be a deciding factor on what you actually choose your slope as. Right now, I'm testing everything with a 1 slope and a length of 18. Now, another factor is show only confirmed breaches. I have that checked off. If I uncheck that, you can see a new signal or a new breach right here would have been fired off. However, you can see immediately the price reverses, so that trade would have been a loss. I have found with that box checked off, I eliminate a lot of these fake out breakouts. Now, if you do not sit in front of a computer all day looking at charts like I do, you can also add alerts to signal when these breaches actually occur. And so you would just click on the alert button with the alarm clock plus right next to it. And you could add a condition of the RECON trend line, bearish breakout. That would be like, for example, right here where this candle breaches down below the lower trend line or this red trend line. Or you could select a bullish breakout, which would be on this candle where you see the price crosses above the upper trend line. And I guess I should point out for you grunts out there, the trend lines are the green lines and the red lines on the chart. Now, with that being said, let's take a look at a few of these signals and perhaps what our trade setups might have looked like and if they would have been winners or losers. And so we'll start back here on the bearish signal where the price actually crosses below the lower trend line. And so my entry for this trade would have been at the close of this candle, and I have to get that price. If I don't get that price, I don't chase it. So if we assume we get our entry at the close of this candle, my profit and stop loss targets will be based on that entry price and a 1 to 2 risk versus reward ratio, which means I only have to be right about 33% of the time in order to be break even. If I'm right 35% of the time, obviously I'm profitable. And again, this strategy so far appears to be correct 80% of the time. So if we get our entry at the close of the candle and I look for a stop loss of say 0.5%, you can see we're never in danger of hitting that. And so then we'd look for a profit target of say 1%, and we actually get it on the wick of the candle right here. And so a 0.5% stop loss would be my risk and a 1% profit target would be my reward. So I'm at a 1 to 2 risk versus reward. And if these numbers sound small, 0.5%, 1%, keep in mind, I typically use about 10x leverage when I'm scalping. And I do want to make it crystal clear, using leverage does involve a high level of risk. And I do not recommend anyone who is not a very experienced trader use that high of leverage. Typically, if you're newer to trading, you shouldn't use more than say maybe 3x leverage, to most maybe 5x leverage. But I do typically use 10x leverage when I'm actually scalping. So my risk of 0.5% is actually a 5% risk. And my reward of 1% is actually a 10% reward. All right, now the next trade sets up as a bullish breach. And so again, we would enter at the close. And so on this particular price action, you can see we have a pretty good pump after breaching that upper trend line. So I would probably put my stop loss down here underneath the trend line and the bottom of this candle at around 0.7%. If I'm at 0.7% for my risk, that means I need 1.4% reward. And to get that 1 to 2 risk versus reward ratio, and you can see we do actually hit that target, so that's another winner. And so now we're 2-0. Now the very next trade is another bullish breach of the upper trend line. I can tell you just by eyeballing it, that one's a loser. If we do our stop loss, in this case is probably going to be around 0.3%. Again, I'm shooting for at a minimum below the trend line that was breached. Oftentimes I look at the bottom of the candle that actually breached. In this case, I would be willing to go back to even the bottom of this candle, which would put us at about 0.3%. Now towards the top side, that means we need to hit around 0.6%, and we don't hit it before we get stopped out on the wick of this candle here. That candle's wick would take us out, so that trade would be a loser. So we're now 2-1. And so if we scroll forward on the chart a little, it looks like we pick up another bearish trade. And so again, if I shoot for my entry here at the close price, my stop loss again is going to be around that 0.7%. And therefore my profit target would be 0.4%. However, unfortunately, on the wick of this candle here, we get stopped out, and so this one would end up being a loser. And so now our win rate is down to 50%. However, because of the risk versus reward ratio of 1 to 2, we're still winners. Now let's take a look at the next bearish break down below the trend line. And if we get our entry price here, our stop loss would be, if we went to the back of the candle here, we're looking at 0.9%. So that means I need 1.8% to be a winner. Now I would probably not go with that big of a stop loss. That'd be a pretty big stop loss. I'd probably bring this back down towards the bottom of the wicks of these candles, which would be that 0.7%, which would mean I need a 1.4% on the profit target, which we do end up hitting on this candle here. Now, if I went with that 0.9% risk reward, do you think we actually hit our profit target? The reality is we do end up hitting that profit target. either on the wick of the same candle or definitely on this candle over here. And again, at the end of the day, you need to determine your own risk management or risk tolerance. So now we are 3-1. Let's see if we take a look at a few more trades here. It looks like the next signal is a bullish breach of the upper trend lines. And so if we enter at the close of the breaching candle and look for our stop loss, we could go with 0.3% for our stop loss. We are never in trouble of being stopped out, and we certainly hit our 0.6% profit pretty much on the wick of the next candle. So now we're 4-1, and again we get another bullish breach. So our entry would be up here. My stop loss would definitely be down below the trend line and more than likely down at the bottom of this candle. In this case, that would be 0.66%. So I'd probably give it a little more and call it 0.7%. And we are never in trouble of being stopped out. Now we are looking for a profit target of 1.4%. And we would eventually hit that up here in this area on this candle here. And so now we're 5-2. I think I made a mistake back here and said we're 4-1. We're actually 4-2, and now we're 5-2. So let's scroll forward and take a look at a couple more trades. And so it looks like the next trade is another bullish breach. And if we entered at the close of the candle, and our stop loss would be below the trend line and more than likely below the bottom of the actual candle that breached, I would say that's at 0.34. I'd probably take that out to 0.4%. So now I need 0.8% as far as profit goes. And we would actually hit that up in this area here. So now we're 6-2, and if we continue to scroll forward and look for more trades, we'll do these last two trades, and that'll be a total of 10 trades. So the next trade is another bullish breach, and so our entry again is at the close of the candle with our stop loss more than likely down here around the bottom of the wick. In this case would put us at around 0.5%. And so we're never in trouble of getting stopped out. And I would just need a 1% profit target, and I would get it more than likely on the wick of this red candle right here. And so I believe that puts us at 7-2. And then the last trade looks to be a bearish breach. And so if we enter on the close of the candle, stop loss would be up here around 0.4%. And so I need 0.8% for profit. And I'm pretty sure we get it on the wick of this candle here. And again, we are never at risk of being stopped out. So 8-2, 10 trades, 8 winners, 2 losers. Very accurate, very profitable strategy. Now this was pretty close to current market prices. However, since I've been filming, I think the market has taken off on me. And you can see there would be another signal here, which would be bearish for the heck of it. We'll go ahead and look at our stop loss would be around that 0.4. Gets pretty close, doesn't hit it, but we definitely hit profit as Ethereum is now currently dumping. And now with this extra trade, we'd be at 11-2 and be waiting for our next opportunity. So I think that's pretty much going to wrap it up for this particular video. It went way longer than I anticipated, but I did want to share with you all what I'm working on. And again, if you're a RECON Trader channel member, I will be making this indicator available to you all in the very near future via a members exclusive video. So again, if you're not a RECON Trader channel member, you might consider clicking that join button. Or you could spike a like if you like this video. If you're not already subscribed to the channel, you might want to go ahead and shoot that subscribe button. If you have any comments or questions, drop them in the comment section down below. And until next time, remember, never send your money into battle without first doing your recon. See you in the next video.